Hey guys, this is Bruce Marshall from Simpler Trading. Tonight I'm going to do the free video and I want to talk about the indexes here and do a little compare and contrast where we've been and where we may be going. So on the screen here I've got the three major indexes, of course. I've got the S&P, the NASDAQ, and the Russell 2000. So I've got these, I laid them out this way side by side so we could take a look at them and, and evaluate each one as we go. So what I wanted to point out first, obviously, we've had quite a few variations or the correlations between the three are not the same as they were even a couple of weeks ago, maybe 30 days ago. But what I want you to notice, let's look at the S&P first. If you notice up here on the S&P, we gapped up here. This was on, let me see, this was on the September the 11th. So, about 3 weeks ago. So 3 weeks ago we had this gap up, and this was actually when Hurricane Irma kind of veered off and lost some strength, and then also North Korea kind of backed off of their rhetoric, so forth. But what I want you to notice, the reason I mention it is that we got right here. This is 2,500, right? And so we bounced up against 2,500, broke through a little bit, touched it, back and forth, back and forth, back and forth. This has been 3 weeks, right? And where are we? We're right back here to 2,500. We essentially haven't moved in 3 weeks, literally. So let's look at the same thing on the NASDAQ here. So there is the 6,000 level. You see we hit 6,012. But where are we now? So we actually are lower. We've actually dropped in the NASDAQ. We're slightly higher in the S&P, slightly lower. But let's get to the fun one here. So again, this was at 1420, and now we're currently, 1490. For all purposes, we're at 1490. So pretty massive move difference in the three indexes, and if you're not paying attention to that, there's some some things some takeaways that you might get out of that. Basically, we know that this latest move was primarily and this was Wednesday. That's when the biggest part. This has been a pretty strong, steady move, but we had this really big gap up here yesterday. We had, if you weren't watching again, we had a 31-point move in one day on the Russell, which is just crazy. It never happens that way. It's about almost 4 standard deviation move, which again never happens in one day. But it did. That was when the tax plan was released, and of course, the thought is it's going to benefit small caps, small corporations, small companies, small caps, mostly. Also, the Russell 2000 has got pretty heavy weighting. It's about 19% financials, and a lot of small cap tech, and then some oil exposure there, all which has been doing really, really well. So, at that point, what do we do with this at this point? And I'm looking at all three of these, trying to compare and contrast. So let me pull this on a larger time frame, and we'll look at a couple of other things. So we'll start with the S&P again. So this is a 1-year chart on the S&P, and you'll notice this trend has been pretty steady the whole year. I did see this morning, based on the new tax plan, that there were some brokerage firms that came out with new price targets on the S&P of 2,700, based on all this kind of the repatriation of the money coming in from overseas, etc. So we definitely want to play the trend to the upside. I'm still think that we absolutely go higher. This could add a lot to the bottom line on earnings, etc. So we're going to play it to the upside, but we want to be careful as well, because we will have this kind of movement as we go higher, and we're approaching October. Anything can happen. We're also, as tomorrow is the end of the quarter, end of the month and end of the quarter, we will have some repositioning, so forth. So just be aware of that, and use tight stops if you've got profit in the S&P. The Nasdaq as well. A little different story here. This is more. I would watch out on the downside if we can't hold this level. There's going to be some, there could be some downside. Now, this channel looks a lot different. I feel like because we're coming into earnings, I think that we will actually, go this way and break to the upside. Going into earnings, assuming everything stays calm with North Korea and everything stays positive as far as the tax plan and all that kind of stuff, or the progression of the tax plan coming together, right? If we break, here again, this could get ugly, probably in the short run. I'm not really worried about it in the long run, I don't think. But anyway, just want to again keep you in mind, and this includes obviously the FANG stocks and any of the tech stocks. If you got exposure there, just to be careful. Lastly, let's look at the RUT, because this again has been the outstanding mover of the bunch. Now here, of course, we have been chopping, for the majority of the year we've been chopping sideways, and all of a sudden we've had this, what you'll notice, and again, if you haven't been keeping up with this or haven't noticed, from here we're at 1450, 100-point move down to 1350, and then 100-point move right back up. But then instead of stopping there, we gapped, completely vertically straight up from there. Crazy move. So I am most leery about the RUT from a downside standpoint. I think the RUT will pause, take a break, consolidate a little bit. I still would not want to short it at this point, but I think the most risk of a pullback is in the RUT first, second would be in the Nasdaq, and third would be in the S&P. The S&P looks healthiest of the indexes. Again, I'm just trying to give you some concepts here. I don't have a specific setup for you. I just, there's a lot going on. Again, tomorrow's end of the month and end of the quarter. Monday will be repositioning. Next Friday we've got payroll. So there'll be a lot coming up in the next week. Expect some volatility, expect some swings, probably intraday. But again, I just kind of wanted to tell you some concepts of the indexes overall, and if you've got exposure there, kind of what I was thinking as far as where might be some strengths and weaknesses that you can either take profit in or hedge if you prefer to do it that way. But anyway, again, the most exposure or the most, I think, downside exposure is probably in the Russell in the short term. In the long term, this will play out like the others. The tax plan will put a lot of money back in corporations for share buybacks and so forth, and will be a good thing. But we don't know what the final version is going to be of the tax code. We don't know when it's going to happen. So take all this with a grain of salt until we see something firm on the tax plan. So anyway, I hope that helps give you some ideas, and good trading, and I'll see you guys on the next video. Thanks.